Hey Adam,
Yeah.
do you know why Britons love tea so much?
No, why?
Because tea leaves.
Hello, this is Adam Zuercher with Hixon Zuercher Capital Management, coming to you in August 2016 with our market and economic update. In this video, we'll talk about economic events that affected the markets in the month of July and what they might mean to you as an investor. Markets had a lot to think about in July with a British exit, interest rates, as well as earnings season, all affecting the markets. After dropping sharply at the end of June with Britain's vote to leave the European Union, markets then rallied for 4 consecutive weeks, bringing the S&P and the Dow Jones Industrial Average to new record levels. We can't predict how markets will react after a short-term pullback like we saw after the Brexit vote. But what we do know is often the biggest days in the market and the biggest moves in the market come after large pullbacks like we saw. Calmly assessing a situation like Brexit is encouraged, and not making an emotional response is very important for long-term investors. So let's take a look at the events that affected the markets in July. The Federal Reserve met at the end of July in another open market committee meeting, and they voted to keep interest rates steady. The Fed's decision was not surprising, and now the debate is on whether or not they will raise interest rates at all this year. It is our opinion that we will probably see one interest rate increase later this year. With the solid economic fundamentals that we are seeing, we think it makes sense for the Fed to go ahead and signal that they have confidence in the economy. What was surprising during the month of July was the second quarter GDP report. During the second quarter, the economy grew at a rate of 1.2%, well below what economists were expecting. Economists had forecasted 2% GDP growth. So now we've seen 2 consecutive quarters of slower economic activity. And this is a bit concerning because the pattern over the past few years has been slowing in the first quarter and then roaring back in the second quarter. However, once you look into the data, we find that the reason economic activity slowed in the second quarter was because business inventories were reduced. We expect that same factor to play a role in economic activity for the rest of the year as businesses work to rebuild their stockpiles. Consumer spending was a positive component of the GDP report. It showed that consumers are still spending money and the consumers are in good shape as the job market is strong. Just this morning we got the July jobs report, which showed that the U.S. economy added 255,000 jobs in July, and the unemployment rate has remained steady at 4.9%. So what can investors expect over the next few weeks? Well, in one word, volatility. While economic fundamentals remain solid, turmoil overseas, the prospect of future interest rate increases, as well as the presidential election are likely to drive market movements. So I just returned from a trip from Honduras, and as I landed in America, it was hard to make the case that there's anything broken with our country. America is a land of freedom and opportunity. Today I'm standing in front of Marathon Petroleum in downtown Findlay, Ohio. Marathon is a great example of a company that is investing in the future of America. Marathon has invested more than $100 million in its downtown Findlay campus, adding 2 office buildings, 2 parking garages, as well as a hotel. Yes, we will have bumps in the road over the next few weeks and quarters, but we are living in a great country where the future is always better than the past. It's important for investors to remember that the White House does not drive the direction of the markets over the long term. It's the great companies of America that are investing in our future that drive business activity. And ultimately, it's that business activity that will drive stock prices higher over the long term. Well, that's it for this month's economic update. If you have any questions at all as these events relate to you, or if you'd like a second opinion on your portfolio, please give us a call at 419-425-2400. Thanks so much for your time and attention today, and we look forward to seeing you next time.